Mark Selby. How are you doing, sir?
Excellent, Matthew Gordon. How are you, sir?
Not bad. Recovering from my birthday efforts of last night, if I'm honest. But I think
happy 42nd birthday.
You're too kind. You're too kind. I'm sorry you couldn't be here for it. The 42nd birthdays are always the best ones.
They are.
But you're back from your big road trip. How was life up at the mine, or not at the mine? But
no, it was great. I mean, the key thing is the one area where things slow down is it gets a little soggy in places, and we had a very wet spring, so there were some parts we couldn't get to, but we've now been able to start drilling it in some areas. We've been waiting since April, so we're going full steam ahead there, and it's good. We'll have a resource update at the end of the month, and then into our PEA at year end. So sort of firing on all cylinders right now. So it's been great.
Good work. Okay, we're here to talk about the world of nickel, and we're on week 14. Would you believe? Let's get going.
Here we go. Yeah. It's nice. The nickel price has gone up about, I think, 40% while we've been doing these. So
we timed it well. We've timed it beautifully.
Yeah, there you go.
So give us.
You knew that was going to be happening, so that's why we decided to get started.
I did. Then, so. That's why I got
good call.
Heavily invested in nickel at this time. So what has been happening this week? What's the new news?
Fortunately, prices actually do consolidate. So after that massive run up over $7 a pound, many times in these moves, I talked about there should be a pullback. And so we finally had a pullback. So we pulled back about 3 or 4% down to about 685 or 14,800 a ton, depending on flavor there. Again, what kind of tipped it over, again, we had all the markets have had a massive move and everything needed a bit of a correction. So that's happening more broadly. But then specifically for nickel, again, there's the three numbers I've been talking about in terms of, ore supply, China's demand, and Indonesian NPI production is, for the first time in several weeks, we actually had a tick up in ore inventory in China. So about 500,000 ton build. Again, the fact that it hadn't built at all for several weeks was unusual. So again, that just, if you're way long and you see that kind of number, that's, okay, we'll take a little money off the table at this point in time. So, again, we'll see what happens. There's only a few weeks really left before the October rainy season in the Philippines really kicks into gear. So again, in general, we're in good shape, on that front. And the other piece of news was Chinese 300 series stainless production. So again, 300 series is the main nickel containing stainless. That was up 14% year over year versus August. A little bit. July was 17%. But now, people are calling for actually Chinese stainless production to grow year over year by about 5%. So, again, that sort of shift in sentiment and shift in actual demand coming through. We've talked at length many times before about this whole stimulus thing, but it is really, kicking into gear and looks, sustained again. The outlook for the next month or two in China's first, stainless production levels to remain relatively robust, which is good for nickel demand. We'll just have to sort of see what's going to happen with the rest of the world, whether it starts to pick, how much it starts to pick up.
It's phenomenal. Actually, we've had lots of conversations with groups with regards to demand coming out of China. This whole infrastructure build is having, in fact, people are making decisions off the back of the noises coming out of China. Nickel, one of the beneficiaries, obviously, which is great. Yeah. But I think not just the battery thematic, but there's a lot of companies have done quite well out of I say these announcements coming out of China, and long may they continue. It'd be nice if the rest of the world kind of caught up.
Yeah, we can hope. We'll see what happens. So
see what happens. Hey, but look, today we're going to talk about a company, because I asked you the question sort of midweek last week, which was, what are the learnings here? Because you talk about cycles, right? And cycles suggest that we repeat patterns, right? So I wanted to understand some of the learnings from the nickel market. You've been in it a long time now. You can you can sort of see some of these patterns repeating. So I wanted to talk to you about Goro. Okay.
Yes.
So I think so obviously that's a real case study there. It's a bit of a basket case at the moment, but. Can you just sort of help people understand? So what was Goro meant to be, and then we'll sort of catch up to where it is today.
Yeah. So Goro is a 4-letter word, and
Good one.
I'm not sure what it means in certain languages, but I think I know what it does. This has been a project that was first announced in 2002 by Inco. Goro was the world's largest, best undeveloped laterite deposit. It has this big, thick, high-grade limonite layer. And so, it was going to be, they were going to use this. HPAL technology had been around for a few decades, but there hadn't been a new HPAL plant had been around. Inco was coming up with their version of it, which is going to be bigger, better than the old version that had been used by Sherritt and others in the past. Initial capital cost was $1.4 billion. So we're now sitting, almost 18 years later. I think the first cost overrun was within less than 12 months of the project get going, and it got bumped up to $2.1 billion. I think by the time Inco was acquired by Vale, the price tag had moved up, up towards $3 billion. Vale itself has spent nearly $10 billion in cash since they acquired the asset. Inco itself had probably spent close to $4 to $5 billion prior to that. So you're looking at one project consuming $15 billion in capital, again, in terms of sustaining operating losses, as well as actually building the physical plant, during that time frame. And again, this is from a deposit, that was, allegedly, it was the highest grade, sort of best undeveloped laterite deposit globally. And it's been, disaster. This is already on top of another large HPAL project, Mbatavi, which is in Madagascar, was placed on care and maintenance earlier this year as well. So, between those two projects, you're looking at close to $20 to $25 billion of capital that's, largely evaporated.
So what happened there? Because obviously people saw huge potential. The grade's good, the scale of this thing was huge. And the potential to make a lot of money was there. But here we are today with a junior company out of Australia, New Century Resources, stepping in to have a conversation about taking this thing over. What's gone wrong? And that fell on its face. So what's going on?
Yeah, that was the final sort of stick that's causing Vale now to put it onto care and maintenance. No, I think sort of your intro in terms of things investors need to, pay particular mind to. This is, we've had a whole series of HPAL failures, over the past, 2 decades. And for nickel, it's very important because, again, in terms of the supply picture going forward, people are now talking about, HPAL projects coming out of Indonesia and hearing some pretty big promises in terms of how quickly and at what cost that HPAL can be built. So, I think I'll just sort of step back in terms of, a little bit of history of HPAL over the last 20 years and some of the lessons learned. So before Andrew Forrest made $20 billion or whatever he's made on Fortescue, he was promoting a project in a company called Anaconda Minerals. And at that time, he was sort of the first wave of HPAL. And he said, look, we're going to build tens of thousands, and then it became hundreds of thousands of tons of nickel capacity per year at less than $1 per pound with this bright technology that people had forgotten about. And again, it's worked in Cuba for decades. We're just going to take it to these deposits in Australia, and away we go. So it's a very complicated technology. So, why is it more complicated than, say, ferronickel? So people have been tossing rocks into fires and watching the metal separate, for sort of thousands of years. So it's very simple. When you have an HPAL plant, what you're looking at is you've got a very discrete bunch of chemical operations, all of which have recycling loads that go back and forth. And they operate into very high pressure conditions and high temperature conditions. So you're continuing to raise the bar in terms of how everything needs to be built. And so, if one part of the chain breaks down, that unless you've built in lots of redundancy, then the whole plant comes down. If you get the input feed wrong, so you've got too much of this or too little of that, and then over time that gets recycled through the plant, then all of a sudden your plant chemistry is out of imbalance and the plant comes down. So in that first generation, you had Murrin by Anaconda. That went bankrupt. Glencore did pick that up out of bankruptcy for not very much, and they did get it working and that's continued to operate, since the mid to late 2000s. Again, not at $1 a pound, about probably closer to three, depending on the cobalt price, 3 to 4 times that cash cost. So it never ever delivered on the promise. We had 2 smaller projects, Cause and Bulong, also get built at that time, and they went bankrupt very, very quickly. So from an investor perspective, Cause and Bulong, it's like, oh, we're just doing a smaller version of what this bigger company's doing. It's only a little bit of capital. How wrong could it go? But again, if you don't build a plant at the right scale, your operating costs are going to be much higher than the big person who's trying to get the technology to work. The second part of it is, again, when it's new technology by a junior, and again, even if it's a tweak, it's new technology. So again, be very cautious when somebody says, oh, we're just taking a few things that have been used elsewhere and we're just recombining them, or we've made a few tweaks, but that's it. But those tweaks they're talking about, claim that they're going to be 50% better operating performance than the way they've been operated before. So, you had 3 companies that went completely bankrupt back in the 1990s, early 2000s, and, wiped out all the equity that were involved in those projects. So Goro and Mbatavi were, sort of the second wave. So again, these were much larger funded companies. They had done they were either in the nickel business or in the HPAL business. These were some of the best undeveloped deposits globally, and we're doing them. These are definitely going to work. There's no concerns. Again, $25 billion wiped out between them, and again, the key lessons there is people say, oh, grade's king. Well, grade does help. It's a big contributor, but grade in the wrong location can be really, really challenging. And so, some of the challenges with Mbatavi and Goro is you're building, multi-billion-dollar industrial plants into countries that don't have very little industrial footprint that are there. So, there's not only the people skills that are locally and the infrastructure that needs to be around that, but there's also the sort of the social and the government infrastructure. So some of the things that went wrong early, it's like, okay, well, we need to have 1,000 workers come into the country. We'd like visas for 1,000 people. Well, you have the New Caledonian, office that probably processed, I don't know what the number is, probably 10 or 20 of those per week. And all of a sudden you need 1,000 in a month. That's a very small, proportion of what needs to get, done at that time. Again, a lot of developing countries, until they develop their own industrial base, end up having a lot of expat labor and expat involvement. So yes, the average local worker only makes X and it's relatively low cost. But when you have to rely on sort of expat and expat cost structures to be able to get what you need done in that country, then you run into the situation, and I think this is true. This is true in New Caledonia, that you have basically European level cost structures with developing world productivity levels. And so, you look at what's happened with Koniambo, which is a Ferronickel plant, and when you look at what's happened with Goro down in the south, it's just highlighting those kinds of issues. That again, investors really should pay attention to, when they're looking at different projects in different parts of the world.
And I don't want this all come across as like anti-HPAL. There's room for all nickel companies. There's a demand for nickel coming down the line, which is phenomenal. And I think, we want all nickel companies to do well. But I guess the point of these conversations is to try and understand what are the things that investors should be looking at specifically. And I know you have helped with regards to, you've got to look at who is going to be building these things, what their track record is, have they got examples where they've built projects of this scale that they're proposing they're going to build, but have they built them before? All of those good things. But in this conversation, it seems to me, right, you're talking about there's pluses and minuses with scale. Obviously, the larger the project, hopefully the bigger the economies of scale, but you've also got a lot of money you're going to need to put together and a lot of technology you're going to need to put together in the right order. So, and it's, as you say, in each incremental change is a new technology in a way, because the order of play is important. So in terms of HPAL, I mean, we've talked before in terms of they're market leaders, and they have built projects of a certain size, and they've overrun. Is there anyone in the market for HPAL who's doing it right at the moment? So the people that we should be looking at going, actually, here's a new HPAL project, it'll be fine.
Yeah, so the one company that's really done well with it is Sumitomo Metal Mining. So again, again, there's a time where scale is good and a time where scale is bad. So, again, when you're a junior trying to get going and you only have access and you think you can only raise this amount of money for a new project. Well, again, projects, if the new project has a double in the cost overrun, then, are you going to be able to raise that equity? And what happens oftentimes is they can't, so they cut corners on the project and it really stalls. Sumitomo Metal Mining built a project. Their first standalone HPAL project was the same scale as these ones in Australia, but they are very well capitalized. They have deep technical expertise that have been involved, in nickel processing for many, many decades. They used off-the-shelf technology. They did not kind of come up with the Sumitomo Metal Mining HPAL process that they got patents on. They were quite happy buying off-the-shelf technology from someone else and using that to build their project. And then they had a very strong local partner who's the largest nickel miner in the Philippines. So you had a lot of local expertise to bear. So, when you're properly capitalized, you then, test it out at the right scale before you go larger. Rio Tuba was a great, that worked out very, very well. They timed it for the nickel market and they made a lot of money on that project. They then they didn't go to 60,000 tons. They did step it up to 30,000 tons when they built Taganito in the southern Philippines. And again, that project largely was built on time, on budget. They had some terrorists blow up the project, literally physically blow it up at one point. And they did sustain some damage, but they were able to recover from that down in Mindanao, the southern part of Philippines. But again, they had a realistic capital budget. They had a realistic time frame for how that project would ramp up. And again, a lot of Japanese companies are excellent at executing the engineering. And again, did it with a strong local partner, who can deal with a lot of the local political issues as well. So, if Sumitomo is the model of how to do a new project using new technology, well, you take each junior who's doing a new project and you compare them against that, well-capitalized technical experience and demonstrated success in this area, experience in that specific geographic jurisdiction. Those are the kind of things that you should really sort of tick the boxes when you're looking at a new project.
Because that's the main thing that worries me when I'm looking at sort of nickel investment, I'm looking at the HPAL component, is the number of times these things blow up or there's a massive, budget overrun, because we, the investors, as usual, get hammered on that one. And someone who comes and picks it up on the cheap, having had these millions of dollars spent, are the beneficiaries. So you almost don't want to have that first mover advantage. You don't necessarily want to get in early to a project before it's going to prove its ability to produce. But also at the same time, it makes it very hard for new entrants on the service side or the technical side to step in and go, hey, we can be a designer of plants for you, and it'll be fine. Don't worry about it, because all the technical knowledge, expertise, and IP sits within companies like Sumitomo. So how do new entrants survive in this space?
Well, again, I think that's where, as a junior mining CEO, I'd like to think that we can sort of, continue to push the envelope and help create, sort of new opportunities for investors. But again, there's a good way to do it so that, you as a company and your shareholders who own the company aren't shouldering all that risk. So again, if it's a new technology, how much piloting and how much test work are you doing? Again, there is no mining CEO who's ever said, oh, you know what, we did too much test work before we started up this operation. We wasted $5 million by doing too much test work on trying to ramp up this new project or new plant. again, yes, you may have a person who has some expertise in that area, but again, if that junior, if you do have a really good opportunity, you should be able to convince one of the industry leaders to joint venture with you. Again, it's nice to, as a junior, to continue to hold 100% of it, but if you can bring in somebody like Sumitomo Metal Mining into a HPAL joint venture, then all of a sudden you can draw on that pool of expertise and talent and deep pockets to be able to help fund the construction of the project going forward. And then again, local expertise. Again, having a person or two is good who maybe has been successfully operated in that area, but to the extent that you can partner with a local champion, who has a well-established network, who has well-established government government relationships, who has well-established community relationships, again, that's the kind of thing that's going to help you succeed going forward. It takes more time. You may not own 100% of it, but from an investor risk perspective, it significantly de-risks that investment for your shareholders.
I think that's a great point. We've actually seen that in the lithium space, where we've seen companies who trying to do it themselves and trying to tell the story that they can technically solve problems, just not being able to raise capital. And others who have gone to the market leader, Ganfeng, Chinese technology, proven, been there, done it, got the T-shirt, and said, we're going to partner up with you. You're going to give us the technical expertise. We'll give you a piece of our company. And the market reaction has been good because they recognize that it's significantly de-risked the company technically. So we do see that in other commodities too. Can I come back to this point on Goro? Because Goro's got pretty good grades, right? Really, it's over 1%. I think, up to 1.4, something like that. I've seen 1.49, it says, plus about 0.12 of cobalt. Surely projects of that sort of grade, you've got to be able to make money. You've got to. Grade is king, always. That's true anywhere you go, isn't it?
No, I mean, Goro has been around for 100 years as a deposit. And again, it is huge in scale, depth, expanse, as a limonite deposit, which is what you need for HPAL. It is, at 1.49, that's a good 20 to 30% higher grade than a lot of other limonite deposits globally. Again, what it comes down to, though, is, grade is extremely helpful, but grade in a deposit in a very challenging location, which, does not have any infrastructure. And so you have to build all of that is there. It maybe doesn't have the human infrastructure in terms of supporting that many large industrial complexes. Aramet SLN has operated there for many, many decades, but it's the a big elephant in a very not big economy. And so is there room for a second elephant without causing all kinds of systems in the communities to break down? And then third, again, when you take a lot of political risk, and then you put on a big dollop of technology risk in terms of trying to introduce some new technologies. It's just, again, it's not additive in terms of the risk, it's multiplicative, right? So, all of a sudden, 3 or 4 things, this risk times that risk times that risk, ends up, you ends up getting close to, a 0% chance of probability. So, that was the key issue with Goro, is that there was a pile of very significant risks outside of just the resource itself, that have really led to that being a $15 billion hole in the ground at this point in time.
Okay, and jurisdiction, obviously, New Caledonia. I hear what you're saying there, but so when we're looking at projects, we're looking at de-risking it based on what we know of the jurisdiction too. Are there parts of the world that we should be looking at? I think we have talked about this before, but where's a nickel project more likely to succeed than elsewhere?
Again, in terms of Western Australia, obviously Canada, North America, there are places that have having the infrastructure, the human capacity to be able to develop a project, and again, places where your project isn't going to be 900% of the rest of the economy in the local area. that's a nice thing to do, but it creates a lot of challenges because again, you're going to be, as I said, that visa example that I used of simply somebody needs to, approve a visa and get it in so your workers can get in. And if that's delayed 6 weeks, you're probably burning $10 million, $20 million a week, and that one person just cost you 60, that one process just cost you $60 million. That wasn't in the budget, right? So, and there's literally hundreds of those very small processes. So, again, if you're going to look at a project that's in a tough political jurisdiction, in a remote location, it should hopefully be the simple, again, heap leach gold is, again, it's not particularly capital intensive. You can fly out the final product. You're not going to be soaking up a huge amount of infrastructure. But if you're going to be processing a low-grade deposit, processing tens of millions of tons of material with millions of kilos of input products that need to go in and hundreds of thousands of tons of output products that need to go out, in those kind of locations are very, very challenging, and you're better to leave those to the bigger, more well-capitalized, deeper pocket companies, as opposed to cross your fingers that your junior geologist exploration crew is going to be able to pull that off.
Essentially, actually, we've just done a report on a silver company. We just published it in the Crux Investor Club. We estimate that they have underestimated their costs by 50%. That's huge, right? The processing cost, that is, and that's significant to get that wrong. I mean, we could be out ourselves, but it's definitely not what they're saying, and ours may be a little bit on the high side, the cautious side. But given what we've seen from peers, it's quite a common feature of companies underestimating how not allowing enough room for error, I guess, is this thing.
Oh no! Again, that's a point I've hit on before, and it's again in a new geography where no one has built a project there before, and then when you have a new technology that no one has built before, and all of a sudden they say, "Oh, okay, we have this feasibility study where we've done a little bit of engineering, and it's plus or minus 15%. The number is $1.4 billion. Well, no one's built this before, and no one's built anything in this location before, so." How confident are you that whatever number it is actually going to turn out to that number? So again, it's not surprising when you have those kinds of massive variables that all of a sudden, CapEx is double, CapEx is triple. And again, Inco was using the best, engineers who've done similar type projects before. But again, it's in a new location with a new technology, and they were out by a massive amount. When you're then a junior who's using maybe a less experienced engineer, and maybe an engineer who's going to give you a better answer that is going to help you promote your stock more than actually build it, that error bar goes up goes up very, very dramatically from there. So again, I always emphasize investors take a look at who is doing the key pieces of the technical report, and how much experience do they have in that specific technology and that specific location, to give your some comfort whether they're going to actually be able to hit that number or not.
Yeah, if the company's not crowing about it, there's a problem. That's for sure. Can I ask you about just one last thing? Because again, there was a sort of debate a few years ago around HPAL versus ferronickel. Who was the cleanest, who was the greenest, and why don't you sort of tell us about that? Because I think it's got some echoes to what's happening today.
Yeah. So again, 20 years ago, part of the whole sales pitch with HPAL at the time was, again, it's a bright, shiny stainless steel plant. There's no air emissions. And again, ferronickel, and we've talked about it before, when it's coal-fired power that's delivering the electricity that you need to melt the nickel to make ferronickel, again, you're looking at 90 tons of CO2 per ton of nickel. There are places where you can use much cleaner green electricity. The nice thing with a ferronickel NPI process is the slag, what's left over, can become a can be produced in a way that's chemically inert. You can use it for road beds. You can use it for a range of different applications where you need something lumpy and hard. And so, that material has a second use as opposed to being dumped as tailings. When it comes to HPAL, the thing that I could never understand was it was being promoted as sort of a cleaner technology. And yes, there's far less stuff going in the air, but you're left with, again, literally 100 tons of soupy tailings for every ton of rock, every ton of nickel that gets produced. And the tailings are such that you can't stack them up into a sort of a larger, smaller pile. And again, a lot of companies are looking at ocean discharge, for that kind of a material. And again, if it's, super fine, it doesn't necessarily go exactly where you want it to go. And. So, I never understood why, it was really promoted as that kind of technology. Because again, if you had hydroelectric power to as a source, you could significantly reduce the carbon footprint of your NPI and ferronickel production. Again, with modern scrubbing techniques, you can take out most of the nasties, out of the off gas before they get discharged to the environment.
It's interesting. This whole ESG component, we're getting so many inbounds with regards to ESG, what it means. How come? I know we've talked about your net zero campaign, which is great, by the way, and congrats on that. But I think people are trying to understand how mining as an industry is going to change its ways. Are you having any conversations with groups around your endeavor?
Oh yeah, no, we've had a bunch of inbound inquiries and a bunch of discussions going on. The thing at it's just the right thing to do. But I think, the reality is, and again, mining companies need to start figuring this in the math is, with your European Union looking at sort of a carbon added tax, like a VAT on products, referencing a certain carbon content. If you're able to produce a lower carbon product, that's going to be a direct financial benefit from that tax that you're going to be able to capture, as a mining company. And again, mining projects are hard. There aren't lots of really high return projects around. So, if you have an ability to take advantage of, additional profits that the government is going to set up for you, then again, it's the smart thing to do to try and identify those projects, that can be inherently lower carbon than other projects, in their same space.
Yeah, I think that's right. Well, we're doing a little bit more work on that, and we're trying to understand with each of our investments, what the company's doing about it, how they can take advantage of this demand in the market for a sort of more responsible mining. But at the end of the day, I still want to make money, so I've got to get that balance right, and the company's got to show me how they're going to allow me to make money and still be a responsible investor. Yeah,
and the other part of that too is again, the reason we're talking about it now is that, again, with everything, if you try and retrofit it on top of something, then there's a greater chance it's going to cost money, as opposed to if you build it in from your sort of day one design that we're going to design this as a lower carbon operation. Then you've got again the home run of you create a massive amount of benefit by being lower carbon, but it's not really going to cost you anything from an operating or capital cost perspective, or very, very little relative to the trying to retrofit after you've already got the design done.
Yeah, I think that's right. Well, hey, Mark, great catch up this week. I know it's been a sort of quiet week in nickel, all things considered. The past few months have been a whirlwind. Appreciate the catch up, and thanks for running through that Goro example. I just think sometimes investors are new to the space they're coming into. They don't have the benefit of having been through a few cycles. They don't have the benefit of understanding the history of what's happened within commodities, and it's just nice looking back occasionally to learn about what the future looks like.
Oh, I know, and again, that HPAL has been a spot where probably close to $40 billion of shareholder equity has been wiped out through multiple opportunities, and on the other side, we need it. It's one of the few places where we can get additional nickel for the nickel market, so we need it to work. We just need it to be done properly by the right companies to be able to deliver the nickel the market needs.
Awesome, Mark. We'll see you next week.
All right, see you next week, sir. Take care.